In this presentation, we will enter a sales receipt and analyze the financial statement, the effect on the financial statements from the sales receipts. In other words, in prior presentations, we went through the process of entering an invoice and then receiving payment on it. This time, we're thinking about a business in which we get paid at the same point in time the work was done, entering a sales receipt, increasing cash at the same point in time that work was done, and therefore increasing revenue as well at that point in time. Time to rise above the crowd with Sage Flip 50 Cloud Accounting. Here we are in our practice file, in the customer and sales page within Sage. Now, we're not in the demo version, but you should be able to follow along with the demo version. We're going to be in the customers and sales item. Last time we had entered an invoice and then the received payment of that invoice and discussed the deposit information as well. This time we're considering a situation where we're getting paid at the same point in time that the work was done. You can imagine basically a cash register in a store or something like that, and we're recording the payment at the same point in time. Same kind of situation with the deposit. As we get the cash, we could put it directly into the checking account, or we might want to basically hold on to it and then put it into the bank as we group all the cash payments together or whatnot, and then put it into the bank as we would see it. We could do that either by putting it into a clearing account first, or an undeposited fund, or by basically not using the ticket in the method that we saw last time. So let's take a look at that now. We're going to go to the drop down up top. We're going to go to the receive money from customer. Same form that we used for the sales invoice, receipt on the sales invoice, but we're going to use it in a bit different method. This time being over here in the apply to revenue tab as opposed to the apply to invoices tab. So I'm going to make this a larger screen. Now the key is, do we want to have a deposit ticket here or not? I'm going to say no deposit ticket, because I'm going to say that I'm going to group these items together and then deposit them into the bank with one deposit ticket we're imagining basically at the end of the night. Now, if I was going to go up top and say, what if we have a new client down here? We may want to set up a new customer as we go. So we can imagine that if we're in our place making payments, we might have to set up a new customer as we do so. Now, of course, there's a lot of data input fields that we can put in for the customer. I'm just going to be putting in the minimum information here, which is going to be the customer ID is going to be the minimum information. So I'll put the name as well here. And we'll talk more about entering the other information in the customer, but it's a basic contact field. So we want all the information, possibly more likely for the customers than other data input, possibly more for the customers than the vendors, in other words, because we want to be able to contact them repeatedly. It also depends on the type of business we're in terms of how much information we're going to want for each customer as well. So I'm going to go ahead and save this. I'm going to say save on that one, and then I'm going to close this back out, and I'm going to be including that here. So we have now Smith A. So there we have that. And I'm going to say it's not going to be a check. I'm going to say it's going to be cash. So let's say we got cash here. And I'm going to put it on the 21st. So we'll say March 21 this time. And the amount, let's just say 500. Or actually, let's go down here and put in the item. And that'll apply it out. So we're going to imagine making a sale down here. So we want the item. I'm going to say 2. And then we'll pick up our item. This is going to be a listed, same kind of thing as if we had an invoice. So we could like kind of parallel the invoice we had last time, which I think were like 5. We had 5 birdhouses, I believe it was. And so there's the tax, something like that. Because this form will kind of mirror what happens with the invoice. So if we were to think about what's going to happen with this form then, we know that it's going to be really similar to the invoice, except that it's not an invoice. And instead of it going an increase in accounts receivable, it's going to increase, in this case, the checking account. So we're going to increase the checking account. However, we didn't put a check number or deposit ticket in here. So we're going to be able to go back into that deposit screen and group them. So it's going to go into the checking account, but we can still go over and kind of group it up together to help us out with the bank reconciliation process. So that's going to be the increase in cash. Then the other side is going to be going to the revenue account. The other side increasing revenue. I also added a sales tax down here. So I'm going to say sales tax. I'm going to say the 7%. So the other side is going to be increasing revenue, but only for the 649. The difference between the two on the sales and the revenue should be in a payable account for the sales tax payable. And also note that if this is an inventory item and we're using a perpetual system, then the inventory should also be going down by some amount that's on here that we can't see on here, but it's being driven by the item. So this item is going to be driving that as well. And then the other side of that's going to be on the income statement, going to the cost of goods sold. So let's check it out. Let's go ahead and save this. So I'm going to say save. You must enter a checker reference number. So I'm going to go back up top and say we want a reference number. And then let's check it out again. Say save that. And then I'm going to close this back out. Let's open up our financial statements. We're going to go to the reports drop down. We're going to be opening up those financial statements. Let's go back to the balance sheet, opening up the good old balance sheet. Once again, I'm going to keep it in the current period this time for March, and I'm going to open that up. And then we should see in the checking account, if I double click on the checking account, we're scrolling down to the bottom, the end of March, and we have this $695.45. If I double click on that, we get to our document, 640. So if I close this back out, it was the 695. And that's going to be the 649 plus the sales tax. And then I'm going to close that back out. And the other side is going to be on the income statement, right? So if I go to our forms, back to the forms again, and I want to take a look at the income statement, and I typically look at the income statement here. So let's open up the income statement, and I'm going to show, I don't want to show the amounts that are zero. Page numbers are okay. Period. Let's keep it in the current period again this time. That'll make things easier. We'll open that up. I think it's going to be under aviary income. So aviary income, if I double click on that, we've got the 649. And of course, that's the amount that we get to keep, not including the sales tax. Closing this back out, closing this back out, going back over to the balance sheet. The difference between the two then should be on the balance sheet, and it should be under the liabilities. So if we go into the liabilities, it should be in the sales tax payable. So if I was to double click on the sales tax payable, that's going to be the liability that will be increasing. And we're going to go all the way to the bottom of this report. And there we have it. I believe this was the sales tax items. So I'm going to close that back out. Then we should have inventory decreasing. So if I go back up and I take a look at our inventory, there's the inventory amount. Double clicking on the inventory and scrolling down to the bottom of this. Let's go see if I just grab it this time. Go down there. The scrolling thing's too slow. And so we're going to say there's the $279.50. Now, if I double click on that, there's our report, our sales receipt, but it doesn't have that amount on it because it's being driven by this amount. We don't want it on the sales receipt because we might provide that to the customer. But we want this to be driving it, this form to be driving the decrease in inventory. So there we have that. The other side is going to be going to the income statement. The other side of that on the income statement. So if I go back over to the income statement then, balance sheet, income statement, we're looking for the cost of goods sold for the aviary. So I double click on the cost of goods sold for the aviary, and then there's the $279.50. So I'm going to close that back out. Now I won't get into the same kind of thing that we talked about with the invoice. The other thing that being affected being the inventory, right? If I go back to the balance sheet, we know that the inventory is also going to have to be tracked not just by amount as being shown here, but also by the units of inventory. So the birdhouses, the 5 that we had, would have to be decreasing if we're tracking the inventory within the system on a perpetual system. So now let's go back on over to our first page here. And note here that we didn't assign a deposit. So we saw a decrease in the checking account, but we should see it in here as well. If I go to the new bank, and then we had it on the 21st, right? So then I can still check these off and deposit them along with other items and include the grouping of deposit in that format. So that's the two ways we can kind of think about how are we going to reconcile this item. So there's two things we need to get done here. One is we need to get the money, and we want to possibly put it into the checking account, but we want to put it in the checking account in the correct grouping. We could either do that by first putting it through a clearing account and then transferring it to the checking account at the end of the day, like an undeposited funds, or we could use this method with the tickets, and so we actually put it into the checking account at the point in time that we get it, so we don't have to do the transfer process, but then we're going to group it at the end of the day and put it into the bank in that grouping, so we can then see the groupings here. Notice if you hit the list and go to the view and edit bank deposits, then you could take a look at the format that these items are being deposited into the bank. If you double click on them, you can see the grouping of these deposits that are being put into the system. So if we double click on this item, we have the grouping, which is 0 on that one. That wasn't a very interesting one. So here's 2 items that are grouped together and deposited into the bank. So that's going to be it for now. Let's get out of here.